That Vodafone is the big story this morning. They've received yet another lifeline from the government, which has converted almost 37,000 crore worth of spectrum dues into equity. Is it enough to save Vodafone Idea? Somit is joining us for more. Somit, the spectrum dues taken care of, but equity dilution and AGR dues also looming.
Well, there's a big news coming in for Vodafone Idea, given the fact that government will be converting dues worth nearly 36,950 crore rupees of Vodafone Idea into equity. Now, this conversion is being done at the face value of 10 rupees, so it might look at a premium given the fact that Vodafone Idea's share prices are trading below its face value. But generally, no share issuance can be done below face value, and hence this is also being done at Vodafone Idea's share prices face value of 10 rupees. Now, Vodafone opposed this conversion. Government's stake in the company will increase to 49% from 22.6%. Now, what it means for Vodafone Idea, firstly, on the positive side, obviously this conversion means that there will be no spectrum installments for at least the next 2 years, that is till FY27. This conversion will also reduce the company's debt by nearly 18% and will also help the company procure the bank debt that it was looking to do for a very long time. Vodafone Idea was looking to get around a bank debt of close to 25,000 crore rupees, and analysts believe that post this conversion, this can happen fast and will also aid the company's planned capital expenditure of 55,000 crore rupees till FY27. However, on the negative side, obviously the promoter holding comes down to around 25.5% versus 38.8%. Then this conversion dues also does not include the annual AGR dues, which starts from March 2026 and stands at around 16,500 crore rupees. Now, this amount of 16,500 crore is way higher than the annual cash EBITDA that the company generates, which ranges around 10,000 to 11,000 crore rupees. And this certainly means that the company is still not out of the woods, and there could be further equity dilution even going forward for Vodafone Idea. And this current equity dilution also reduces value of minority stakeholders. So that's also a kind of negative for the minority shareholders at this point of time. Now, what it means for the industry, for Industars, obviously this capex continuity of Vodafone Idea is beneficial for the growth and the cash flow of Industars, and analysts believe that this will lead to more dividend flows also coming in from Industars going forward. And this capital expenditure plans of Vodafone Idea, analysts believe that there is a new tenancy opportunity of nearly 45,000 new tenants coming in from Vodafone Idea on Indus Towers over the next 12 months. Now, when it comes to Airtel and Jio, obviously this continued government support is coming in positive for the telecom sector, and this also means that taking tariff hikes going forward could be much more relatively easy for the sector.
Okay, Balaji Subramaniam, Vice President Research at IFL Securities, joining us for more on this. Mr. Subramaniam, very good morning to you. Thank you so much for speaking with us. Now, is this going to be enough of a relief for Vodafone? It's yet another lifeline. The question is it going to be enough to tide over this company?
Good morning. Thanks for having me on the show. My sense is that it postpones the problem for the company. It just kicks the problem further down the road. Because if you look at the conversion that is going to happen, firstly, it's only spectrum dues, and that too from an overall government debt perspective, about 17-18% of the government debt is what is going to get converted into equity. That means, yes, in the absence of this relief, Vodafone Idea would have had to cough up something like 29,000 crores on spectrum plus AGR in FY26, and from FY27 onwards it would have been much higher at around 43,000 crores per annum. Now with this relief, these payouts will come down. So for FY26 they will have to pay around 18,500 crores. For FY27 about 23,500 crores, and in FY28 that would be around 33,000 crores. So while there is a substantial relief of around 40,000 crores over the next 36 months, the catch here is that the numbers which I mentioned just now post relief, they are also quite high, and they are significantly higher than what the underlying FCF generation of the company will be. Of course, there could be a debt raise of 25,000 crores now that the cash flow position is significantly better. The prospects of the company succeeding in raising debt funds, those also go up. But even with that, my sense is that probably around 18 to 24 months down the line, there could be still a cash flow crunch, and I wouldn't be surprised if the government, if the company approaches the government to convert more of the dues into equity.